Good afternoon and welcome to the Think Realty webinar series. My name is Rodney. I am the Director of Sales for Think Realty. We are so glad that you joined us today. Today we're going to have Liz Faircloth from InvestHer, and she is going to be talking how to scale from a duplex to a 670 unit deal. So just so you know, this is recorded. We will be sending out the recording afterwards. So if you're taking notes and you missed something, not a problem. You can go back and watch it later on. And just so you know, if you have any questions during the presentation, go ahead and put them right there in the chat and she will get to as many of them as possible afterwards. And so with that, we'll just turn it over. Liz, welcome to the show.
Awesome. Well, thank you so much. Excited to be here. In the chat box, I think we can control the chat box here. Just wanted to welcome everyone. Welcome all the folks here to my presentation about scaling to a 670 unit apartment complex. And so I've been investing for about 16 years. I'm going to jump into my story here in a moment. But before we do that, I'd love to hear where people are calling in from, or where you're calling in from, or where you're from, what you want to get out of today would be great. I always like to know, the folks on the call so I can be of most help to all of you. And but yeah, if you don't mind sharing with me where you're calling in from, that'd be great. And I'll start jumping in. So yeah, your name, where you're calling in from, and when it comes to scaling, what do you want to get out of today? What do you want to get out of this presentation? I have a lot to share with all of you. In terms of content, but I always like to be of most help as I possibly can when I spend time with people. So that'd be great if you can share your name, where you're calling in from, and anything you want to get out of our presentation. And I'll start going and start moving and shaking because I know we have an hour and I want to be mindful of everyone's time. But if you can put that in the chat box, that'd be great. All right, so I'm going to get going here. So a little bit about me, and again, thanks for joining me today. A little bit about me. I've been an investor for about 16 years. This is my family. I'm a mom, a wife, I'm a lot of different things. I do love to run most of the time, unless it's too hot. And I am the co-founder, do love wine as well. I am the co-founder of the Real Estate InvestHer community and also co-founder of the DeRosa Group. And the DeRosa Group is where I have gotten my real estate experience and building our portfolio over the last 16 years. And the Real Estate InvestHer is a community of women that I partnered with my friend and now business partner Andressa 4 years ago to launch the community to support women and empower women to live a financially free and balanced life. So these are just a few pictures of me and my family, a picture of one of our apartment complexes, because that's our focus is multifamily, mostly larger multifamily syndication. And this is me participating in an Ironman, a half Ironman, which is many moons ago, but still something I'm proud of that I did. It was an intense day, but regardless, that is a little bit about me and a little bit about my background. So let me get into InvestHer. For those who don't know, we have a lot of resources there to be of help to women investing. Our mission is to empower women to live a financially free and balanced life on their own terms. And whatever that means to you, we have a free community, free meetups across the country and a few in Canada. We also have a free membership and a paid membership. We're growing a EXP team as well for agents who also want to invest. And we have a podcast that's we release twice a week and we are published by Bigger Pockets. So that is our partner in that endeavor. So just a little bit about our community. So as I share the topic today about scaling, this is a big one, and this is a big one for a lot of people because there's a lot of fear, right, when it comes to scaling. And again, I would love to connect with all of you as much as I possibly can, because that's kind of how I like to teach and share. So if you kind of put in the chat box, when it comes to scaling your portfolio, what is your biggest fear? So if you can't put in that chat box, I'm going to force you to participate with me here. And we'll get going to the presentation. But if anyone would like to share their biggest fear, because there's a lot of fears here for people. And I want to make sure I speak to those because it's real. And it's not something that should be dismissed. It's not something that should be ignored. it's something that we need to kind of hit head on so we can move through it powerfully. And it doesn't stop us from scaling. It doesn't stop us from growing our portfolio. So yeah, if you can, I invite you to put in the chat box what your biggest fear is. I like when folks participate. If you're listening and doing other things, that's okay too. But if you have something to share, please put in the chat box. I'll monitor as we go. What I found to be the biggest challenges, the biggest fears that people have in talking to a lot of women, because that's the community that we've built over the years. So I get a chance to connect with a lot of women. Time is one of them. Oh, hey, Jen, thanks so much for sharing. Overextending myself and not just financially. Yeah, that's a big one, Jen. Overextending your time, overextending your commitments. So I get it. That's a big one for many of us. So time would be kind of connected to that, right? You have too much on your plate. So similar to what you're saying, Jen, that the thought of doing something more is overwhelming, right? It can be a little overwhelming. The money is also a challenge for people as they scale. Obviously, as you get into larger projects or more doors, et cetera, money certainly can be something that you have to manage and figure out of how you're going to do that, how you're going to financially fund those expansions and those additional properties. And then you have knowledge, right? Knowledge and confidence. That's a big one too, is knowledge to know what to do, especially when you get into larger projects or different types of projects, or even construction. And obviously confidence, being able to, I know a lot of the women in our community are like, I need to understand the entire process before jumping in. Some women just jump right in. Other people, want to really understand. So that could be a concern or a challenge or a fear. So as I share my path with all of you today, and I share just like a bunch of case studies, which is really what I have in store, please shoot me questions. Please feel free in the chat box to add questions there, because I'm here to help. I'm here to just add as much value as I can to your lives. And any way I can do that, I'd like to. So please feel free. I will try to field your questions as I go. I don't need to take questions at the end. So again, just know that I'm here to help. Okay, so I'm going to share with you today in terms of scaling. Again, my experience is multifamily. You can scale a lot of different things, right? You can scale single family homes. You can scale vacation rentals. You can scale self-storage facilities, right? I'm going to share a little bit about multifamily in particular, small multifamily to large multifamily, because that again is just my world and what I've lived in for the last 16 years. So, and I'll share my trajectory with you. And this is just a sample of some of our projects, but from a 2-unit to a 4-plex to a commercial building to 10 units to 49, et cetera, et cetera. Our last project was a 5-property portfolio, deal in North Carolina and Kentucky, and it was 5 different properties in 2 different states, and it was 667 units. So, okay, so let's get going here. So it all began 2 units in 2004. That was 160,000. Our last deal was 60 million. So there's been a scale, right? There's been a range. And it wasn't a linear scale. I will say that. There was a lot of bruises along the way. There was a lot of wins. There was a lot of losses. And there was a lot of twists. There's a lot of turns. So our journey is our journey, but I can't say that it was perfect by any means. I can't say that there wasn't some sleepless nights, many of them. So as you scale and you grow, know that fear keeps coming up, right? And every time we get to the next level or do something different, fear can come back. So fear doesn't just go away. It's a human condition. We all experience, we all kind of manage. So, okay. So with regards to the 2-unit, I'm going to go back to 2004. I'm dating myself. That was me many years ago. But anyway, it all began for us reading Rich Dad, Poor Dad. I don't know for those on here with me, if that's also a way that you began. But we had no money, we had no experience, we had no connections. And I'm being funny, but no problem. So we were in our 20s, really didn't know much. And we started with a duplex. So I'm gonna tell you a little bit about this duplex. It was right outside of Philadelphia, a little town called Roxborough. And I have a few teaching points here. This began for us creative deal finding and funding. So the way we found this project was we called for rent ads, literally just called for rent ads. Hey, are you interested in selling your property? the thought process behind this was that if there's a vacancy in an existing building, then the thought process would be that that small landlord, right? That landlord that has a small duplex, fourplex, whatever, might be frustrated because there's a vacancy. And so they might be motivated to sell. That was the philosophy behind this finding tired landlord strategy. So we literally just called for rent ads. At the time, me and my husband walked the whole city of Roxborough, just knocked on doors and, pretty much just tried to do whatever we could to find a property to purchase as our first one. So we did that. We got someone very interested. We landed on a property here, the one in the middle, the orange one, or the yellow looking building. And the way we funded it is we needed about $30,000 for a, really $30,000 for a, it was both the down payment and initial construction was how that kind of, was what, how that ended up being what we used the money for. So we got a lender, which was my father, who lended us the money. We paid him 6%. I will say, if you ever get family involved in lending or as an equity partner, we've worked with private money partners. That's how we grew and scaled. But you have to treat those family members just like you would treat anyone. We put everything in writing. We really, at the very beginning, said this is a private lender. Just because it's my father doesn't mean we don't treat it as such. So I just highly recommend. I don't care if the person's your neighbor, your best friend, your mother, your father. Treat them as though you treat anyone, and do it as sound as you can in terms of legal documents, because you never know what happens and you want to protect everybody involved. So I'm a big fan of doing that. So that kind of led us to, we actually did a 1031 exchange. We moved to New Jersey and said, okay, we're going to buy properties in New Jersey. We really focused on New Jersey initially. One, it was close to our house. And two, there was a lot of opportunity in the area that we were in terms of buying dilapidated properties, renovating them, right, and then renting them out. The classic BRRRR strategy is we hear about and we know about: buying, renovating, renting, and then refinancing, and then repeating. So a couple learned lessons here as we scaled and we transitioned to a new market. As we bought 3-4 units was the next purchase. So this was 16 units at the time. And the learned lesson here as we scaled, we were used to a duplex, right? Running the numbers on a duplex. Well, we missed a lot of important expenses when we ran the numbers on these properties, and we overpaid on these properties. I think that's one of the biggest mistakes that people make when they are scaling their portfolio, hands down, is they spend too much money, or they really just don't account for all the expenses they really have here or need. So a couple of things: the age of the property matters. We know that as real estate investors, but these particular properties, roofs are going to cost you, HVAC systems are going to cost you, old electrical systems, electrical wiring is going to cost you. And windows could actually be quite expensive too. If you have 3-4 units and you have to replace all the windows, right? So you have to remember your bigger ticket items, not just your monthly expenses, but your capital expenditures. We did not put enough money into our budget to really, quite honestly, renovate these buildings the way they probably needed to be at the time. So we ended up having issues with the roof leak, and that was a surprise. There just was a lot of surprises when we bought these properties, and had we really were a little more mindful of all the expenses that we need to manage, we probably would have not spent as much on these properties or walked away from them. So that was a learned lesson as we scaled into these properties. I'll also say one quick lesson for you is that when you run the numbers, and you certainly will get obviously the property taxes, you want to verify those property taxes with your local tax assessor, and you call the local municipality. They will verify those taxes. More importantly than verifying, they will actually tell you if they're going to reassess those taxes. And that becomes very, very, very important, because we've had properties in certain areas that have doubled in property tax, and that can totally change your expense line, your expense analysis. and quite honestly, your P&L, right? Where your cash flow is going to matter. You're not going to have cash flow if your property taxes are doubling, and that might be where all your profit goes, right? So again, verify all of the expenses with the seller. Sellers don't tell you everything, so just be mindful of that as you scale. You have to really trust but verify, as they say. The win here is that we started to really landlord and understand what goes into effectively landlording. This is just a quick little snippet from Up, the movie Up. So often real estate investors, as they're scaling, can get very distracted or get very, they look at other things. The shiny, what's it called? The shiny object syndrome, I forget the name of it. It's pretty much just being distracted. So our next purchase in terms of scaling was not multifamily, which definitely impacted our ability to scale. Not in the most positive way either, I'd say. So around 2008, right before, 2007, I think, right before the crash, we purchased this building. It was a 10,000 square foot building. And the mistake, again, there's no mistakes, we just, learn lessons, if you will, but it really derailed from our multifamily focus. So we started to get some success with one niche. And then we got this opportunity shown to us. And we said, wow, we ran the numbers. We got all excited about the cash flow. And what we didn't consider and didn't realize was, we didn't do our market analysis of the tenants that would want this type of building. And it's a 10,000 square foot building in downtown Trenton, New Jersey. There wasn't a whole lot of companies that really wanted to lease that amount of space. So we had a situation in front of us. So we couldn't find one user. And then the market crashed. That didn't help. So we ended up doing, and we still own this building today. We're actually selling this building. We've owned this quite some time. But we found the ability to basically take a 10,000 square foot building and cut it up into small users and small offices. So as you're scaling, and the key is focus. Honestly, I think we would have had a different trajectory, I think, in the middle of our kind of, 16 years, had we focused mostly on multifamily. We ended up focusing, by 2010, my husband and I are like, we're focusing now. But there was many years that we kind of got distracted. So watch the distractions, watch just jumping into different things, which we did when we were a little more naive, a little more junior, and just learning the business. So we made lemons out of lemonade, but it definitely derailed a little bit. Then we kind of got back on track. And please, again, if you have questions, thoughts, please shoot them in the chat box. I'd love to engage with any of you and answer any questions you might have. So the next purchase in terms of our scale and some learned lessons was basically a 10 unit. And this was in New Jersey as well. And the part here that we learned was this is our first syndication, meaning, how familiar folks are with syndications, but we grew our business by working with private money partners. You can have private lenders you work with. You can have equity partners that you work with, active equity partners. You can have both. We even had projects where we had somebody lend us $50,000 and we had an active equity partner that put in $50,000. There's a lot of ways to creatively finance and partner up with people. This is our first syndication where we pooled money together and worked with solely passive investors. These were not active investors. These are solely passive, literally $50,000, $100,000 to put into a project. And the win here was that obviously you file with the SEC, you work with a syndication attorney, but this was 19 units. And people start to scale and syndicate to really buy, bigger buildings, more units, and also to do it with other people. There's obviously a process to this. There's a lot of legality to all of this to make sure you're doing things correctly and legally. So you have to have the right team. You have to have the right attorney. However, this was our first time. We call this DeRosa Capital 4. So that was DeRosa Capital 4. We are actually in the middle of DeRosa Capital 16, just to give you a context of all the different syndications that we've done over the years. So this was a really strong property. We've since sold this. We held it for about 7 years, and it was a very, we exceeded the returns for our investors on this. But the learned lesson here is when you're scaling into something different, for us, this is our first syndication, make sure you have the right attorney that matches what you are trying to do. You might have used a real estate attorney on other deals, but for this project, we really, we wanted to use a syndication attorney who knew this type of business. So again, I can't stress that enough. When you're scaling, make sure you have the appropriate team members to match what it is that you're trying to do. So I will say that. A couple of things here in terms of creatively financing, and so many times this is from The Simpsons. People ask for money, and I really want you to think about, especially creatively doing deals and being able to work with other people, private money partners. That's really how we scaled our business and grew our business. We work with hundreds of private investors. You're providing an investment opportunity. And I just want to get that into your consciousness, because so many people, it's almost more desperate if you're asking for money. This is not a handout. As someone who's buying property and doing this type of business, I can tell you're providing a win-win. You should be, right? Where they win, they build their wealth, you build their wealth. So again, as you start to work or scale working with private money partners, you have to think in this way. You're not asking for money. You're really providing an opportunity and building their wealth while you build your own, which I think is the greatest part about creatively financing deals and projects. So let's keep moving here. Then our next purchase was an 18 unit. This was an 18 unit that was half vacant when we bought it, right inside of the northeast side of Philadelphia. Big lesson here, as you scale into larger multifamily, we really always found our projects very creatively through building relationships with brokers. That's really how we built our business. That was what we knew how to do. That was kind of our skill set and our know-how, was to build relationships with brokers. And other people do direct mail. Other people find off market deals by cold calling. There's so many different ways, obviously, to find off-market deals and to find deals, even in a hot market. And you got to stop saying that there's no deals to be had. There are deals to be had even in today's market. You just got to be creative, and you got to just do things a little bit differently than most people. So for us, we really hounded this one particular commercial broker we met. We got to know them. We would send him. We got to know what his favorite sports team was. We sent him something. We just really wanted to build this relationship with him so that he thought of us when a new opportunity came up. And you have to get to know someone to obviously figure out how to build that relationship with that particular person. But we stayed in touch. And finally, he called us and said, "Hey, I got this 18 unit. Would you like to take a look at it?" So we jumped on it, ended up making an offer, worked out. We sold it 3 years later for a high return, 19.4% internal rate of return. IRR stands for those who don't know. And the learned lesson here is you've got to differentiate yourself from everyone else calling commercial brokers. Because if you call them, everyone else is looking for multifamily. What are you going to do differently? What are you going to do uniquely? And as you scale, that's critical, because they're going to think of you, and you have to differentiate yourself if they're going to think of you. I'll tell you, one of the most important things commercial brokers care about is working with investors that they know can close, meaning they have the financial backing, they have the financial resources to close. That becomes really important. And not everyone that's looking for multifamily might be able to show that to the commercial broker. So if you're going to call commercial brokers and you want to get into larger multi or larger, whatever niche you're looking to get into, you got to really differentiate yourself and make sure that they know they take you seriously by, your ability to close, because that's when they make their money. And that's one of the most important things they care about, is getting to closing. So they, the building can close and everyone gets on their merry way. There was a mistake made in the sense of, and I don't want to go into too much detail about this, we did end up doing a 1031 exchange. It's actually episode 42 on the Real Estate InvestHer podcast, if you want to learn more about it. It's a really has a good ending, but it's a tough one for us. We ended up getting the money that we made here, plus all the money that that we profited with, because we had investors' capital plus a nice profit when we sold. We did a 1031 through a custodian, and they ended up doing they ended up being like a mini Bernie Madoff. Unfortunately, that the gentleman in this company stole millions of dollars from people. So that has been an interesting journey. We are, it's been made whole, everything's worked out, but it was a tough one at the time. And I'm not going to go into too much detail because that's a whole story in and of itself. I don't have the time to tell right now, but I just say that you need to be careful always of the people you're doing business with, and even 1031 exchange custodians. So I'm going to keep moving here. The next purchase for us was a 49 unit. And as we scaled, at this point, before the 49 unit, the only projects we were doing deals with, I'm sorry, the only buildings we were purchasing were buildings that we were managing ourselves. So we had our own property management team for everything up until this point. And this was the first building. This was an hour and a half from our house. And we learned that we couldn't handle doing this ourselves. So we ended up hiring our first third-party management company. If you're going to scale, the chances of you being able to do it all yourself are going to become less and less. And that's a good thing. Also could be a scary thing. So this is our first time hiring a third-party management company. I will give you one quick tip. If you are hiring a third-party management company and you want to kind of know if they're going to have some skin in the game, you can ask them to be a private investor in your project with you, a private money partner. So they ended up investing about $25,000 as a limited partner in this project, and they're still an owner of the building. So that's one way that you can start to, just kind of see the property management's kind of level of interest, and also know that they have some skin in the game, meaning they're a part owner of this building, not just the property manager. So just a few thoughts there in terms of positioning yourself well. So this is a great project. I actually have a case study. I'm going to give you a link to a free, I think it's a 30-minute presentation I give that gives all the numbers of this deal. Really good stuff because we walked away from it once. We made an offer. The seller didn't like the offer. We walked away. We didn't let emotion get involved. And the owner ended up coming back to us 6 months later and meeting us much closer to our offer. Even in this crazy hot market, don't let your emotions get involved. It's really important. Make sure you are holding to your number, and that you don't let emotion get involved, and don't just get in because it's so frenzied and hot and overpay, because that will hurt you in the end. So I'll say that as you scale. Okay, next project here. A couple of numbers here, just real quick. I go into much more detail on the case study, but we were able to get a bank loan for about 2.5 million. Equity required was about $1 million, and that's where we syndicated this and worked with passive investors to really take this project down. Passive investors invested anywhere from $50,000 to $250,000. That was the range. And these are all, pre-existing, these were investors we networked with. We became a thought leader. We were sharing content, adding value to people, educating them. And that's how we were able to develop a, pool of investors to work with so we can create that win-win. Okay, I'm going to keep moving here. And then the next project was in North Carolina. So, how I just told you that our furthest deal at the time was an hour and a half. This was 2 hour. I'm sorry. This was much more than 2 hours away. This was a 2 hour plane ride, or an hour and a half plane ride. We lived in New Jersey. This was in North Carolina. So bottom line here is that as we scaled, now this is 198 units. This is bigger than our previous projects. New state, right? So as we scale, you might need to bring on new partners, not just new team members, but new partners that bring something different to the table. Our partner in this project in particular, obviously we all know the importance of underwriting, right? Underwriting the property to to assess, is this a good opportunity in terms of how you can improve the property, how you can add value, how you can bring rents up, all the things we know how to do and are important in our business of investing in real estate. So for this particular project, the biggest thing that we learned about as we scaled into this project was we couldn't do it alone. We couldn't do it with the same team we had. So we actually ended up developing a new partnership with someone who was much more schooled in the underwriting side of it than we were at the time. I mean, underwriting a 50 unit and a 20 unit and a 10 unit is one thing. Underwriting close to 200 units is a different ballgame, right? You're playing on a different league. So that was a very important part. The other mistake, or the other learned lesson, I'll say, as you scale, your property management team, if you're not doing it in-house, becomes incredibly important, right? We all know that the managing of assets is where, the business plan either happens or it doesn't. So we ended up working with a property management company that was great. They were a great company. They just weren't the best fit for this particular market and this particular asset class. So that's the other thing I want to just make mention of is as you scale, start to become an expert in one particular asset class and market. What do I mean by asset class? We have an expertise in workforce housing. We don't buy in Class A, new construction type of properties. We buy dilapidated C-class properties that need a lot of renovations, both exterior and interior. That's what we've always done. That's our niche. So we've done that in 4 different markets, 4 different states. That's what we like to get in. That's what we like to do. That's our business model. You also need to make sure the property manager that you hire has experience, not just in the market, but with that particular asset class as well, because it's not all created equal. Okay, and that became a big issue here. And the win and just the learned lesson was syndicating a larger project with a couple hundred of investors, right? Not just 5 investors. So I'm going to skip this for now because I'm going to be mindful of time. But I'll go back to it real quick. From a market perspective, I'll just speak very quickly to this. It's 4 things you want to look at when you're looking at a market, especially as you scale, right? You want to look at supply and demand. You obviously want to look at competition. As we scaled, looking at a duplex, I wasn't thinking about competition. As we bought a 198 unit, we were looking at competition. What buildings are you in competition with? What is their rent? What are their amenities? That becomes important when you're assessing larger projects and you're scaling into larger projects. Obviously, jobs is critical, job growth, job diversity, where the job is moving, because people follow jobs and people need to live somewhere. So again, remember that as you navigate. In terms of class of neighborhoods, depending on the neighborhood that you invest in, you want to look at crime. What is the crime rate? Your lenders will also look at crime. So they may or may not lend to you or the property in terms of the project, depending on some of these things. Who are you renting to? Who are the renters in this community or in that community? Who are, how many renters are there? Is it more of a home ownership versus a renter population? You want to know that stuff, right? You want to know cost of living. You want to know as much as you can about, the neighborhoods and obviously what you're getting yourself into, just so there's clarity of who your customers are and what they're looking for. So a couple other things when you're scaling, there's things that you look at when you're looking at small units, medium size, or large. The big thing here is that as you scale, you're looking for, as your larger properties, you're looking for value add opportunities. You're looking for driving up your NOI, your net operating income, right? So you want to increase that. So your properties, your deals are worth more. Jobs, competition, amenities, et cetera. When you're at smaller deals, again, you want to look at everything as you can, but you want to look at visibility and you want to look at property management. Small deals are more like the rents, current and potential, safety, amount of work that's needed. What are the other opportunities for income? My point in saying this is that, yes, you look at the same quote unquote basic pieces for any size property, but there's certain things you're going to look at more as you scale than you did at a duplex. So that's the bottom line. Okay, So a couple other things here, and then I'd love to take some questions and see if there's any questions here. So after the 198 unit project, we ended up getting into a new market, which was in Kentucky. So a couple of learned lessons as you scale. As you scale, the chances of you getting into new markets is higher, right? Because you're scaling maybe beyond that one market. You're scaling into new markets. You're scaling with new size, all those sort of things. So a couple of things here are some learned lessons. This is in Lexington, Kentucky, is where we have close to 1,000 units in Lexington, Kentucky at this point. So we have a lot there in terms of our own portfolio. We kind of found a market that was kind of under the radar at the time, and it was a growing market. It had the right growth, trajectory to it, but it was kind of under the radar. We tend to also like sub-markets. So it's not the hottest market, it's not the largest market. It's kind of like a secondary market, if you will. That's more aligned with our business model. It doesn't work for everyone, but it certainly works for our business model. I'll also say this. We really, again, every time we've scaled, the team becomes critical. It becomes honestly, it becomes everything, because you can only grow so much if you have the right people as partners, as a team, and you have the right process, right? As they say on, what's that show? Process, product, and process, product, and people, right? And you also, for us, as you scale, the beauty of scaling in a particular market is you start to leverage relationships. So what does that mean? You're the same contractor who's renovating one building is going to be able to renovate the other building because it's right next door. Even when we had smaller properties in New Jersey, we owned 25 units on one street. And that was neat because we had an economies of scale. When we hired the landscaper, they cut the grass at all the properties. That's less money out of our pocket than having 5 properties, 5 different areas of New Jersey. So again, thinking about the value of scaling in one particular market will help you save money from an expense perspective. This is just a lot of detail. I'm not going to get into too much. This is one of the more recent projects we had. This was in a new market for us, which we have quite a bit now, but this was in Winston-Salem, North Carolina. Again, as you scale, I have to tell you, the next lesson here is just leveling up your own business, your own team, and yourself. You have to level up your own skills, because if you're not leveling up your own skills and you're not leveling up your own leadership, your own entrepreneurial skills, then that also can limit you and limit your ability to scale. We got a new portal to serve our investors. We hired some new people, and we also had a new structure. When we syndicated this particular project, this was accredited investors only. Other projects we did were non-accredited investors. You can syndicate both of those populations. This, though, was the type of filing that where you do just accredited investors only, has its advantages. Other strategies have its advantages, but this is where you can actually proactively solicit. I could put a banner on my house saying, "We're raising money for this deal," because the way you're structured with the SEC. All things you have to kind of get to know and learn. So this is our latest project, and then I'm going to wrap up here and take questions and share a little bit about some things we have going on. See if you want, more resources, more help. But this is a 670 unit portfolio project. This is our largest raise to date, which was 20 million, and this was this year. We just closed on this project. We had 250 investors, and a few things here though. This was our largest project to date. So from a scale perspective, it stretched us, right? Stretched us from a sense of, I think our last project, we raised 10 million. This was double the last time. However, when you're scaling, you start to have an expertise in something. You should. So again, there's not the whole, I got to figure this out for the first time. You're literally rinsing and repeating, right? It shouldn't be this wow, how are we going to do this? This is just more of what we've done in the past. It's just at a larger scale. Really important note, this is 5 buildings in 2 states, and they were in the 2 locations we already had buildings in. Why I say that becomes important is because, again, we have that economy of scale. We have already established relationships there. So not saying we won't ever go into new markets. We're actually looking at a few new markets as we speak. But there is a learning curve when you get into a new asset class or you scale into a new market. So it's just something to be mindful of. And we knew these two markets very well. We were very comfortable with them. We moved quickly. So again, as you scale, it might feel like, whoa, you're getting to something larger. But if you're mitigating your risk by certain strategies, that's the name of the game, is how can you mitigate your risk as you scale? So summary, just some thoughts here. Don't be afraid to start small, get in, figure it out. We didn't start with a 670 unit. We started with a duplex, and then we learned and pivoted and kept going and didn't give up. And we had a lot of challenges along the way, to be honest with you. I didn't get into all the challenges, but we had a lot of, we got knocked down a lot. And, you got to just make sure don't give up, keep figuring it out. Don't underestimate expenses. I think it's a big one when people are scaling. Don't be a student in multiple asset classes. Had we focused on multifamily from the beginning and then really focused on only multifamily until we scaled that asset class, I honestly think we would have gotten probably further sooner. But that was our journey, and I'm very grateful for it. We were able to really learn a lot of our own style, our own, investment strategy. But that is something that has value in terms of scale, is the power of really becoming good at one thing and to be able to do it over and over again. Become a master relationship builder. I don't know what your personality is. However, I think we were able to scale because we were able to build relationships and create win-wins with people, not just where you call people to ask them for something, but you give and get, right? You help them, they help you, and create an ongoing relationship. The gentleman that sold us the 18 unit 8 years ago, we still have a relationship with. So that just as a testament to that. Our first two private money partners, if you will, when we started to get into the private money, scaling our portfolio with other people, that was 2010. That was 12 years ago. And we still have very good relationships with both of those people. So I say that not just toot our own horn, but building relationships and staying in touch is really important. Be willing to tweak your business plan, what's working, what's not. I don't know about you, but you're not still in business or still investing if you're not able just to tweak and to assess and to really step up and say, okay, I can do this differently, or I need to do this differently. Surround yourself, right, with like-minded people to do that. Always be scaling up, scaling yourself, team, processes, everything. I shared a little bit about this project. There's a 49 unit. I get into a lot of detail. It's a little freebie I'm happy to share with all of you. It's just the realestateinvestor.com/49 unit. And I do want to briefly, before I take questions, share that Think Realty is a wonderful affiliate of our conference coming up. It's InvestHer Con. I just do want to briefly share this because we are literally pouring ourselves into this day in and day out. I have a call later today to get into some specific things around our conference. So this is going to be a 2-day transformational experience for women investors. We have 5 keynotes led by Kim Kiyosaki. We have 20 women speaking on all different types of niches of investing. We have some amazing sponsors and companies working with us and that are going to be there as resources. I think Realty has been a great partner of ours and certainly helping us promote it, which we're so grateful for. And we also are doing this until May 7th. If anyone's interested, women that want to get around other like-minded women and be just around just a great amount of women and just really transform each other's wealth building strategies, which is the goal here. We're doing a coupon, Realty 10. You could put it in the checkout on our website, therealestateinvestor.com, where InvestHer is. You get 10% off until May 7th. So that's kind of neat. So, all right, I'm going to do some questions here, but I did want to promote and share a little bit on InvestHer. So Realty 10 is the coupon until May 7th. And I hope you can join me. I'd love to see you in Charlotte. All right, so we got some questions here. I'm going to stop sharing and we'll get some questions going here. I think I saw one in Q&A. Oh, no. Okay, got you. I see. Okay, got you. From Douglas Stern. Okay, Douglas, do you consider multi-use? It includes a lot of multifamily because retail or hotel has massive support from the city. I'm trying to understand your question, Douglas. Have I considered investing in multi-use, meaning like Okay, so it has a variety of things like retail. Yeah, we've never invested in a hotel. I mean, I've never invested in, we have retail. The projects we've done mostly, Douglas, and there's always different ways, right? That's what I love about real estate investing. We've done a lot of mixed use buildings where there's commercial and retail on the first floor, and then there's apartments above it. So we've done a mix of like residential and commercial from that perspective. That's what we've done a lot of. Even some of our larger multifamily, the projects in Kentucky have 4 or 5 retail, have businesses, and then above it, 30 to 40 residential units. But in terms of like hotel and lots of retail, it's mostly less retail and more like apartments has been our niche. But yeah, there is an opportunity, I'm sure, depending on the community, to get it, to invest in different projects. I will say right now that, okay, so sorry, I'm doing different stuff, primarily multifamily. You're advising against doing different things. Would you consider this a different class? Okay, so I'm not advising you against doing something different than multifamily. If you're doing what I was trying to suggest to you, not to say what you should or shouldn't do, but I think often if you're getting a niche in one particular area, so if you really start to understand, multi-use properties where there's retail, there's a hotel element, and maybe that's your niche, and you become really good at that, Douglas. My point in saying become really good at one niche is to be able to do it over and over again. That's how you have the ability to scale quicker. Because we're focused on multifamily and we're focused on a few key markets, we were able to scale faster than, say, getting into a whole different niche, a whole different market, because you want to mitigate your risk. And when you're getting into something new, there's a learning curve. I don't care how smart you are, there is a learning curve. So that's what I meant by that. But if you have a niche, try to keep doing that niche over and over again, because that will help speed up, if that's important to you, scaling. I hope that helps answer that question. But yeah, happy to answer any other questions you have. But I hope I gave some helpful content here, and certainly gave food for thought. There's no recipe to scaling. I don't have the magic wand or the secret to tell you today, but I can tell you that, as you grow and learn, you can become better at that niche, and then you can move faster. So I don't know if there's any other questions, Rodney, or anything else I can share here, but I want to be mindful of everyone's time. I think no, that's a raised hand. So, okay, I think that was Douglas. Okay. So I don't think there's any other questions. Anything else, Rodney, that we should do here in terms of any other things you want to jump in with, or should we just close it out? I think actually you told me just to close things out, now that I'm remembering what you told me. Okay, so you did tell me that. You said just close it out after you're done. Can I ask
if there's
verbally?
no other questions, then you can close it out. If anybody has questions, don't hesitate to chime in.
Yeah, Douglas is asking, can I ask verbally? I don't know if you have an ability to do that. Do you, Rodney?
I can hit allow to talk, so I'm going to allow him to talk. So he should be able to do that now.
Yeah, let's go for it.
Okay, since I failed on my first question, to ask clearly, can you hear me?
I can. How are you doing?
Doing well, thanks. How are you?
I'm good.
Really good content. I appreciate it. So
good. I'm glad.
This is a totally different question. We have a 67 unit that we're looking at in Akron, Ohio.
Okay.
And we put in an offer for $3.4 million, which they said, yeah. And then we started going through the PSA process, and we're going back and forth, and they went dark. And we found out, we decided to pull our offer. In the meantime, rates had gone up by almost a full % while we were waiting for them.
Right.
And so therefore the value of the property went down for us. And so I said to my partner, I think we should pull the offer. And really there was basically silence. And we did find out they had another offer. I learned yesterday that it was for 3.75 million, but it sounds like they're having a hard time executing. And so my partner wants to go in and offer 3.7 million. I said, I don't want to do that. This goes to your overpaying question. I mean, to me, and I want your advice on this. I think we need to find out where they are in the process with their negotiation. When did they give them an extension? And when that is over, then say, all right, we're willing to offer you. And I would come in at 3.4 million with the financing basically lined up and say, do you agree? What is your advice?
Yeah, so often, has the offer been pulled already, or is that still on the table? Or they're considering it, or are they just?
We pulled our offer about a month ago. And
Gotcha.
But they're in due diligence with somebody else, and it seems like they're having a hard time pulling the money together.
Got it. Yeah, I think being patient in these situations is really important. I could tell you from the project I was sharing, the 49 unit, and this was pre-COVID, right? So I think COVID has only created more of a frenzy around multifamily, to be perfectly frank. So the chances of people overpaying for multifamily right now is higher, much higher, right? Even
Yep.
before COVID, it was still competitive, and it's just gotten more competitive. So when we made our offer, the owner was asking 3.8 million. And we offered 3.3, and he laughed at us and said, there's no way I'm selling it for 3.3, go pound sand, or whatever he said. I like that phrase, go pound sand. And we really liked this building. This was in a small town in Pennsylvania. It was probably one of the nicest buildings we'd ever we're going to buy. It was definitely going to put us on a different level. I mean, when I say don't get your emotions involved, we really, really liked the project. And at the time, though, we really took a step back and said, this works for our numbers, and especially the interest rate and everything like that. So we kind of just let it go and stayed in touch with the broker. So that's the key here too, is stay obviously in touch with the broker and relationship with them. And then the deal fell through for the other buyer. And then 6 months later, the owner's mortgage was ballooning. He was in a situation where he was going to lose the property at that point. So he was even more motivated to sell. And then we came up, I think, a little bit, but we ended up we were around our offer, and it worked around our offer. It didn't work there, although it praised for that. So my point in saying that is to just be patient. I would be patient, because especially with, the talk of an upcoming recession and all the news right now, people are getting more nervous, which is a good thing, right? For deals to fall through, for deals not to work, and for, quite honestly, people who are not experienced or don't even know how to get to the closing table, for deals to just fall through. You're going to see that happen a lot now, more than we've seen it the last 2 years. That's what I think. So I would be patient, and I would stay in really good contact with the broker. That's what I would say.
If you can hear me, thank you.
Yeah, I hope that helps.
Yeah, absolutely. Thank you.
You're going to see all the novices and all the people who are kind of in the business with a lot of money that didn't really know how to put deals together or get to the closing. You're going to start to see them starting to fall down. That's what's going to happen now. That's what I think. Because now there's pressure, right? Interest rates are increasing. There's talk of different things. The market's getting a little like, oh, okay, are we redirecting now? So I think the people who are serious and the players they're going to start to shine. That's what I think.
Awesome. Thank you.
Yeah, no problem. Yeah, good stuff though. I'm excited for you. Stay patient. You'll get it. But yeah, no, I appreciate everybody being on. It was a pleasure. I'll put my information here. If anyone has any follow-up questions, or I can be a resource. I'm very active in our Facebook community, but even if you're not there, I'm just going to put my email here, InvestHer.com. The real estate, I didn't even spell real estate. I'm just gonna put my email in here for anyone who has any follow-up questions or needs any support. The real estate InvestHer.com. Yeah, that's my email. Also put my website here. I'm very active in our Facebook community and Instagram and all that good stuff. And you can hear kind of any content, anything I can serve or help I want to. So I'm just gonna put our website and our and my email in there, and also put that Realty 10 coupon. If you know any women or you are a woman, I'd love to have you join us at InvestHerCon too. So that's 10% for the InvestHerCon. So I'll just put that in there too. But with that, thanks so much for being on today. I really appreciate everyone's time. I hope this was helpful and would love to stay in touch and help in any way I can. Rodney, thanks so much for having me. Appreciate Think Realty very much. Excited that we continue to do projects together and education together. So I'm happy to do this and be a resource. So thanks everyone. Have a great rest of your day and talk soon and love to hear from you.